In our previous video, we compared between investing 500,000 shillings in a money market fund that compounds on a daily basis at 18% return and investing a similar amount, that is 500,000 shillings, in an infrastructure bond with a coupon rate of 18%. From the comment section, one of our subscribers did ask us to kindly do calculations for a 10-year fixed coupon bond with a return or a coupon rate of 16%, investing 500 a similar amount, that is 500,000, and compare that with investing the same amount in a money market fund that has an interest return of 16% over a similar period, that is 10 years. Another subscriber asked a question, and I quote, "Why can't you compare like to like that money market funds are compared to fixed coupon bonds?" That is to mean that for this subscriber, she felt like we were comparing mangoes and pawpaws, comparing a money market fund and an infrastructure bond to her was not comparing two like investment vehicles. And for that reason, I think by saying that a money market fund is comparable to a fixed coupon bond, she's also calling us to do the same. Assume we are investing 500,000 at a return of 16% over a period of 10 years, then we should compare a money market fund in that scenario and a fixed coupon bond. That is collaborated by another subscriber, a Mr. Tim Black. And I quote, he says, "Now we need one for a fixed coupon bond because it is the one that is often floated." That is the same request that we do a comparison between the money market fund investment as an investment vehicle and a fixed coupon bond, which we hereby do. As promised, this channel will always be coming back to respond to your comments and queries, and for that reason, today we are going to compare investing 500,000 in a money market fund with a return on interest rate of 16% over a period of 10 years. That vehicle will be compared with investing the same amount, that is 500,000, in a fixed coupon bond with a coupon rate of 16% over the same period of 10 years. For that to be possible and us to be fair to the two vehicles, then we must make some assumptions. And one assumption, or what we want to hold constant, one is that we shall not make any withdrawal. We shall not redeem from the two investment vehicles. We shall ensure that all what we have invested, the 500,000, remains in these vehicles to term, that is up to the end of the 10th year. The second factor to hold constant is that we shall not make top-ups. And a top-up here, I mean we are not going to get money outside the two vehicles to top up or reinvest in the vehicles for purposes of the analysis. But number three, as a factor to hold constant, is that all the returns, the coupons from the bond, shall be reinvested. And so that we don't disadvantage or we don't reinvest in another vehicle to disadvantage the money market fund for the purpose of comparison, we shall reroute or channel reinvesting the coupons as they come in the same money market fund for purposes of compounding the coupons or compounding the investment in the bond market. For the money market fund, the interests that are generated from that investment are automatically reinvested. And therefore, for that, we are holding that factor constant so that we now make the investment in the bond fair to the money market fund. Further to that, because we now know that bonds pay their coupons semi-annually or 2 times in a year, and the coupons are not automatically reinvested. They are paid on the due dates directly to your settlement account, which is not linked to the primary investment account in your DAO ZSD platform. Then we are the ones who will be reinvesting in the money market fund, and we are using the same money market fund so that we assume or we reinvest at the same returns as we had objected, in the same returns as the other option in the money market fund. But it's important also to notice that for the fairness of the calculation, we could also choose to invest the coupons in another opportunity, because the coupons that we are getting from the bond or this bond is giving us a higher return compared to the money market fund, and that brings us now to consider taxation of the two investment vehicles. The money market fund is taxed at a withholding rate of 15%. And that means if you are having an interest rate of 16% for the money market fund, considering that withholding tax of rate of 15%, it gives us a withholding tax of 2.4% of the 16%. And therefore that means our net return from the money market fund will be 13.6%. On the other side, the fixed coupon bond will be taxed at 10%. To bring that one to perspective, because generally we know that all interest returns or interest incomes, qualifying interest incomes, are taxed at a uniform rate of 15%, withholding tax, which is final, but exemptions are given when it comes to the bond market investment, whereby any fixed coupon bond that is issued for a period of 10 years or more is taxed at a lower rate of 10% and not 15%. So it gives you a saving of 5%. That means that the 16% coupon gross that we are getting from the bond, we shall receive a net of 14.4%. Then at that point, you will notice that these two investment vehicles, one is giving us a net return that is lower than the other. And therefore, if you were to be fair to the two vehicles for the purpose of the analysis, then it would only mean that we are supposed to reinvest the coupons from the bond in a similar or in a different vehicle, but giving us the same return of 14.4%. That should be back in our mind as we continue with the analysis, so that at least at the end of the day, because we have to conclude with a statement that the one vehicle gave us or generated higher than the other. So those other factors to look at are the ones that should inform your decision at the end of the day. So fast forward, we will begin with calculating the total amount from the investment in the money market fund at the end of the 10th year, because that one is straightforward. And therefore, using this formula for compounding of lump sums, we are arriving at a figure of 1,947,603.247. That is out of calculation. And that has been collaborated by the results that we have gotten from the ethical money market fund calculator, because we also decided to use the same daily compounding money market fund. And to answer a question that I've seen common in the comment section, our viewers asking which other money market funds do compound on a daily basis, we have other two at the top 10 money market funds in year 2024. And that is, we have Saiton Money Market Fund, also does a daily compounding, and the Nabo Capital Money Market Fund also does daily compounding together with Ethica. So those three money market funds would be the best or our choice for this part of comparison, because we are choosing the daily compounded money market funds to maximize the return from the money market fund. We are also looking at maximizing what is coming from the bond, but we are restricting ourselves to the same money market fund for purposes of this comparison. So once we have gotten that figure, then we need to look at what we'll be getting as a total amount from the bond in 10 years' time. And because this is an ordinary annuity, if we strictly use the formula and we give out the final result, it will not bring out the real aspect, the facts, the basic facts about the coupons that we are getting from the bond, and how literal it is. So we are going to be factual and simple as we can. And for that reason, we need to appreciate that the bond will pay us 2 times in a year. Out of the calculation of the coupon, if you take 14.4% of the 500,000 to determine what we are getting at the end of the year as a total, what we should expect from the bond, the coupon, we are getting a figure of 72,000. What that means then is that at the end of the first 6 months, we'll get 36,000, and another 36,000 will come at the tail end of the year, because bonds pay us semi-annually. There is something that is very important to notice at that point, and these are the basic pieces of information about these investments that bring out the aspects, and you can primarily tell where you can get the higher return even before you finalize the calculation. Because as we had cited earlier, because of the difference in taxation, where the money market fund, a 15% part of the interest is withheld as tax, while on the other side it is 10%, meaning that the bond gives us a return that is higher by 5% that we are saving on tax. Then now, on the point of coupons, there is a 36,000 that we are receiving earlier, 6 months earlier from when we are supposed to receive it. And the most important part for that is to note that this amount that you receive as the first part of your coupon is not discounted. You get a 50% of what you're supposed to be getting after 12 months, but you get it earlier. Think about the time value of money. And that one, compare with what happens when you invest in treasury bills. In treasury bill, if this was a treasury bill of 16%, once we invest, the amount that is discounted, the 16% should be giving us 8,000, but that is not what you will be talking about or talking of as the discounted amount to determine what you pay. We subject that one to a discounting factor to determine what should be the 8,000 at 0.0. That is not done to the coupon that you receive media in a bond investment. That is not done on the coupon. The 50% coupon that you are receiving media is not discounted, which means that you leverage on time. An amount that should have come to you after 12 months has been given to you earlier, and therefore it gives you an option of reinvesting it. That will not happen with the money market fund. The money market fund compounds that money as it comes, but the bond gives you your income, your entire income earlier, and giving you another element of compounding. Considering this dialog box when you are using the money market fund calculator, this calculator does not recognize an investment that is of a period that is less than 1 year. If you feed the 0.5 to determine the compounding of the first 36,000 that you are receiving media, the calculator will not work. Once you do the calculation using our ordinary calculator to compound, you realize that the 36,000 that you receive media for the remaining 6 months to close that year, that amount will have yielded 2,539.841. That is the compound element for every 6 months for the 10 years. Because that is not being supported by this calculator, and we have to compare the outcome of the calculator and the outcome of our calculation as a control. So we have identified two sets of cash flows from the bond. The 36,000 that we are getting made here as our first coupons, or the 50% coupons, they are supposed to be reinvested for 6 months. But because this calculator only recognize full year compounding, it means we have to use the 72,000. So for that reason, these 2,539 that we are getting as a compounding of the first 36,000 is supposed to be added to the 72,000 to make it 74,509. But that one will confuse many viewers when they will do their own math on the 14.4% of the 500. They will realize the amount is higher, but that confusion, we will sort it out by separating. Let us compound the 72,000 over the remaining period to term. Then these 2,539, we shall compound it as a separate schedule to get the totals. So that way, this is the schedule when you reinvest the 72,000. Each year you are getting 72,000. So once at the end of the first year you get your 72,000 and you reinvest it immediately into a money market fund, it will have a remaining 9 years. The second year at the end, you receive another 72. You push it to the money market fund for 8 years. The third year end, you have another 72,000 to the money market fund for 7 years. Then the next one for 6 years, and that will continue up to the end of the 10th year. Remember, the last year you will receive both the principal investment or your capital of 500,000 and the coupon for that year. So in our schedule, you notice that at the bottom, we have 572,000 because that one will be paid at once. But don't forget, this is for the purposes of a calculation. We know there is a 36,000 that is coming mid-year, and that is the one that has generated the second schedule for purposes of literally compounding. Appreciating that we received a 36,000, we laid it in the money market fund. It has generated an interest of 2,539, which we are now using the second schedule to compound for the remaining term so that we don't bring confusion in the first schedule of the 72,000. And that has been brought about because of the inadequacy calculator of the money market fund. So once you have done that, you are getting a total from the first schedule of the 72s, you are getting 1,931,176.804. But remember now we have the second schedule of 36,000 that were being compounded. And that schedule has given us a total of 47,945, which means that the total that we shall receive from the fixed coupon bond shall be 1,979,122.247. So deducting the total from the money market fund of 1,947,602.964 from the total that we are getting from the bond, that is 1,974,122.247, you are getting a difference of 31,519.283. That conclusively means that the fixed coupon bond is realizing a return that is higher than what we are getting from the money market fund. You should also remember the other factors that we held constant. The coupons that you are getting from the bond could also have been wired to other higher yielding fund accounts or opportunities, your investments in the bond market, and in the long run, they generate more than the money market funds if you are actively involved in their investment. Because as an investor, you can either be passive investor where you are dedicating your investments to another person, which is good to save your time and concentrate on other things. But you can also be a DIY investor, an active investor, and these are the small comparisons that matter in terms of compounding and maximizing your returns to grow your capital. Thank you for watching. If you are new to the channel, we request that you subscribe to the channel and hit the notification button because this channel dedicates to give you value-packed videos, at least 4 of them every week, and YouTube will be notifying you when we do so. Don't forget to like the video. Don't forget to give us a comment and your reaction in the comment section, and as we always do, we will come back and respond to those comments. Thank you for watching.